Jinesh, welcome to the Frugal Spender Podcast. How are you?
I'm well, thanks for having me.
No problem. It's taken us a while to get here. I think we've had 3 attempts now. We've had the weather stopping us. We've had technology and just generally life. So I'm glad to finally get in front of a camera and have a chat with you.
No, it's good to be here. No, and it's taken a while, both busy people, but it's great to be on.
Absolutely. So Jinesh, for anyone who's listening who might not know who you are and what you do, would you mind just giving us a bit of a background as to how you got to where you are today?
Yeah, sure. So I'm Jinesh Vohra. I'm the founder and CEO of Sprive. So my background is actually kind of nothing to do with mortgages. It's I used to be at Goldman Sachs, which is a US investment bank. I was there for 14 years, progressing through the ranks, and then decided a few years back to leave the corporate world behind and start Sprive. For your listeners who are not aware of what Sprive does, we're essentially an app that helps homeowners pay off their mortgage faster and save interest. Essentially the way the app works is you link your bank account, we then help people set aside spare cash, and with one tap they can make overpayments towards their mortgage, helping them save money essentially.
Nice. I've used the app. I think it's really good. And I mean, obviously we're going to get deeper into it, but I think anyone who is interested in the idea of overpaying their mortgage, definitely, even just to download it, it's free to download. That's correct, isn't it?
It's completely free, Android, iOS, yeah.
And we were just talking before we started recording about how other apps that use similar technology with open banking have really kind of opened the door, because certainly for the newer generation, and I'm a millennial, but millennials and younger, we're so used to like just connecting our bank to things. I remember when eBay first came out, well, not when it came out, but when people started using it quite a lot, and I wanted to buy something, and my mum was just terrified about me using her card to put it onto the internet. So I think that kind of whole barrier of like, oh, this company might have access to my bank account, that kind of fear has almost dissipated, which is, I'm sure, pros and cons. Of course, it's highly regulated, and you can't just take people's money. But I think that idea of open banking and connecting someone's bank to automate things and have a positive end result has allowed, apps like yourself to thrive.
Yeah, I mean, open banking is a government-backed initiative. The regulators really pushed open banking really to help consumers get better kind of financial services. In the past, the banks have contained all the information, and that allows them to essentially profit from the information without necessarily creating innovation that necessarily is going to help ordinary people. So I mean, it's really good to see the UK kind of leading almost in the context of the entire world in terms of that kind of innovation, and now you're seeing lots of other markets trying to catch up. And you're right, like more and more people are getting very, very comfortable with it. I think the last number I saw was over 4 or 5 million people using open banking. I think the analogy that you used around kind of shopping for things using your debit card, like when it first came out, putting your online bank details where you're essentially spending out in the internet, it could be quite scary. But then after now, everyone does it. If you think about how many people shop on Amazon and one-click purchases, and they don't even think twice. And if you take a step back, that's your debit card loaded electronically. If someone had access to your debit card, they could spend that money, how they like. And with open banking, it's regulated. It's a lot more secure. Ultimately, we're using this to provide customer value. At Sprive specifically, we use open banking for a few different reasons. One is we use it to verify a customer, to make sure that ultimately we know who our customers are, and that mitigates the risk of fraud within our app. So we have zero fraud within our app, because for you to be able to sign up, you need to be evidence that you can access your bank account. And then secondly, we've built like an algorithm, and we overlay AI on top of it that allows us to understand people's spending behavior. So the idea is that we're helping people to pay off their mortgage faster, but different people have different amounts of money that they can put towards their mortgage. And so the AI is essentially working out how much you're spending. So like some people, they'll have good weeks and bad weeks, and good months and bad months. So a simple analogy is like Christmas. Most people in the UK spend a lot on Christmas because naturally you're spending money on, like, say, Christmas presents. And so the algorithm is smart enough to go, look, you're spending lots here, so you're going to have a lot less money to put towards your mortgage compared to weeks and months where you're really doing a good job and you're spending less, you're saving more. And so that becomes really powerful. And then in other areas, we're also using it. So one of the things that we do within the app, and not just overpayments, but we help people find better mortgage deals. And so if you've ever taken a mortgage deal, lenders will ask you things about about how much do you spend on maybe if you have children on childcare, and they want to get an idea of your affordability, because they want to understand your ability to say, if you take this mortgage, can you actually afford it? And again, by having access to it, that allows us to be able to help with the kind of questions the lenders ask. That means that it makes it a lot more efficient and less time consuming when our customers are trying to get a mortgage.
Yeah, no, I think that's great, because it's two pain points for me, and it combines two things that I love about sort of personal finance. One is overpaying your mortgage, because I think that's something that's I think years ago was something that people thought about was more in the zeitgeist, whereas now it's very much get things on credit, buy now, pay later. It's almost the opposite of I want to own my house outright. Instead, let's just leverage up to my eyeballs. Let's have as much debt as I can, because the house is an asset. It's going to grow in value. So I'm just going to mortgage. And then you get to 60, 70 and you still have a mortgage, which is a scary reality for so many people in the UK. So the idea of overpaying your mortgage, I love. But then probably the thing that I preach the most about personal finance, and it's whether it's saving, investing, whatever it is, it's about automation. And the fact that your app allows you to do both of those things at the same time means there's less friction to go, right, because not very often on a daily basis, people will go, oh, should I overpay my mortgage this month? Because you're thinking, oh God, the price of milk's gone up, or what. You worrying so much about the day-to-day stuff, you never really get time to sit down and go, how much can I pay off my mortgage? So the fact that it automates it is by far the best way and most efficient way to get people to actually do it. My question to you then would be, it's great, clearly that works and I'm fully on board, but how would you convince somebody who has never thought about overpaying their mortgage? Because you get your house, you go, okay, what is my mortgage payment? You understand rates maybe a little bit, but I mean, I was 21 when I got my first house. I didn't understand this stuff. All I knew was, here's my pay slips to the lender. They tell me whether I can afford it or not. I get the mortgage. They tell me how much I pay every month. And I just keep doing that. And I probably did that for 6 years before I even actually went, right, how does this stuff work? What do we know? How do rates affect what happens? How would you pitch it, let's say? Not the app, but how would you pitch overpaying your mortgage to somebody who's never thought about it?
Yeah, sure. And I went through my own personal journey of getting my mortgage, and not really realizing how mortgages necessarily work. I think when you're first buying your property, like you said, Brian, you're very much focused on just getting the keys, getting the house, getting onto the property ladder, and then maybe even your first step is like decorate, get the furniture in, etc., etc. But I remember for us personally, my wife and I, when we bought our first house, we got the mortgage offer document. And it said for every pound that we borrow, we're paying 50p in interest. And I was thinking at the time, interest rates were practically zero. And thinking, wow, like if I'm borrowing, we borrowed like around £300,000, that's £150,000 in interest that I was going to be paying my lender over the lifetime. And that didn't make me feel good. I felt like that's not great. How can we pay our lender less? And so doing some research, I realized that if I paid more than my minimum monthly payments, then that would give me the benefit, if I did it in the right way, of essentially helping me kind of save interest and pay it off quicker. And then when I started doing even more research into it, one of the things that really shocked me is that lenders front load interest payments. So at the beginning of your mortgage, you're paying mostly interest. So when you take out your mortgage, and it obviously depends on rates, but 60 to 70% of your monthly payments at the beginning of your mortgage is essentially you paying interest. So if £1,500 a month is your monthly mortgage payment, then a big chunk of that is not even going back to the amount that you initially borrowed. And so what I learned quite quickly is that the earlier that you start kind of paying off your mortgage faster, the more interest you save, because ultimately your monthly payments consist more of interest. And if you wait until later in life, then you're essentially starting to pay back the amount that you originally borrowed, but you're saving a lot less interest. And a good example is my dad paid off his mortgage when he was around 55, and he felt so great by doing that. But one of the things he did, he let his savings literally just build up, and then decided that actually I'm getting close to him wanting to retire, and so deciding that he's going to put a big chunk towards the mortgage. And I kind of sat down and said, if, in hindsight, if you just regularly chipped away, and just put incremental money on a very regular basis, you would have saved so much more interest. And us, like my wife and I, going through the journey of paying off our mortgage faster, we were trying to be quite aggressive and quite goal focused in the way we did it. But through that journey that we did, over 10 years, our property value probably doubled in value, but also we saved about £70,000 in interest. And the other part of it is that it gave me the freedom to quit my corporate job and start Sprive. Like if I had a mortgage and I went to my wife and said, hey, I've got this idea, I want to do something crazy, I want to leave my job at Goldman's and start this new business and create this new app, or with the mortgage and having a family, she would have said, yeah, you're having a laugh. But the fact that we didn't have a mortgage meant that you can then take risks. You can whatever's important to you, whether it's, some people it's spending more time with family, maybe quitting their job, doing a job they love, going part-time, going traveling, starting your own business. When you don't have a mortgage, you don't have that pressure and stress that every month I need to earn enough to be able to essentially have a roof over my head. And then if you imagine, you say your monthly payments are £1,500, and no longer do you have to pay that £1,500 to anyone. That's £1,500 you can do whatever you like with, and that just really kind of becomes a game changer. And it also changes the way you think, which is really, really empowering. And the last thing I'd say is, a lot of people, and I used to think like this, is that you need to save thousands and thousands of pounds before you can start making overpayments. And the premise of the Sprive app is that that's not the case at all. Even if you can afford a couple of pounds a week, or it starts to £10-20 a month, it starts to build up and make a huge difference, especially with rates rising the way they are. And the beauty of the app is, even if you don't have any money, you can literally sign up, pause your auto saves, and then just use Shop with Sprive, which is this really cool feature that we built, which is every time you do your regular shopping, you get extra money towards your mortgage. So, and we're partnered with brands like M&S, Asda and Sainsbury's are coming soon. We've got Morrison's, we've got Waitrose, Primark, Uber, and the list goes on. So we've got some amazing brands. And every time you shop with these brands, you get extra money that helps you pay off your mortgage faster. And at the moment, I think the average Sprive customer is on track to save £12,000 in interest and pay off their mortgage 4 years earlier. So that's kind of proof in the pudding that just these small actions on a regular basis just can make a huge impact on one's life.
Absolutely. No, I love that. The idea that you chipping away at the mortgage, I find I always think of it as in the same sort of way as credit cards, because the average person doesn't understand how that minimum payment, it's a trap at the end of the day. The lenders want to make as much money from you as possible. And the fact that you said it's front loaded, because they know I don't know what the average time somebody stays in a property is, but let's say if it's 5 to 10 years, as soon as they either port their mortgage or change their mortgage, they're just going to spend their entire life paying interest until they stay in a house for a long period of time and potentially pay it off. But with credit cards, if I looked the other days, if you hold a balance of just £1,000 and paid the minimum payment of that, it takes you nearly 10 years to pay that back. And you think £1,000, yeah, that's fine. That's hardly anything. I'm just going to carry that balance. You're paying so much interest for so long. People just have become accustomed to the fact that they just hold that debt. You said in there that you used to work for Goldman Sachs. Did you work in an environment whereby you not promoted debt, but were you on the side of trying to get people on board to provide products whereby people do have debt when you were there?
Yeah, I think generally financial institutions and even the fintech space that now I kind of operate in, I just see everyone trying to get people into debt in some form or shape. I think personally, I think there's very few businesses that are trying to get people out of debt. I think because that's how you make money. Think about the natural kind of financial institutions. They take deposits and they give you very little interest, and then they use those deposits to lend money at a much higher interest rate, and it's a very good lucrative business model. And the sad thing is that if you look at just for homeowners, it's getting more and more difficult for people to get onto the property ladder. Property prices are rising and salaries unfortunately haven't been rising, as much. Like my personal example, my property value doubled over the last 10 years. I assure you, when I was earning, my salary did not double. And so you can understand why, people who are trying to get onto the property ladder is becoming much more challenging. By the time, the average person get onto the property property ladder, especially in like cities like London, you're talking about mid-30s, maybe even early 40s. And then you're looking at then taking out, the home that you want, and the lifestyle that you want to live. And so people are borrowing a lot more for longer, because the only way they can afford the monthly payments is starting to borrow for 30 years or 40 years. We were talking to MoneyFacts, and they were saying that 59% of mortgage products now being sold have a standard term of 40 years. So you can do the maths very quickly. You see a lot of people getting a mortgage past the age of retirement, kind of late 60s. And then you get another home, etc. Things get in the way. You might get a new car, etc. And suddenly, before you know it, you're in a lot of debt. And it takes a lot of time to kind of pay it off. And you ask the average person, like an average homeowner, do you want to spend the next 25 to 40 years paying off your mortgage, essentially having that pressure and stress to be able to earn enough to be able to have a roof over your head? I think most people say probably not. But unfortunately, it's because people can't afford the homes. The institutions have to step in, and you have to take a loan. You're almost forced into it. And if you can't get onto the property ladder, then you're a renter, but then all you're doing is paying off someone else's mortgage, and they're benefiting and making profit from the fact that you're kind of renting. So it's kind of almost catch-22. And then I see, even like you mentioned, credit cards and student loans is another area, but they're also on the rise. Student fees have gone up. On the credit card space, you see like the pandemic, we've got obviously the cost of living crisis. You've got the emergence of easier to take on debt with the concepts of like buy now, pay later, like Credit Klarna and other companies like that. And so you're seeing kind of debt just generally rise and rise and rise. And I've seen firsthand how debt can really ruin lives. People, once you get into debt, it can kind of spiral out of control. And then once you're kind of contractually obliged to pay that debt, it's super difficult to kind of get out of the position. So I think it's unfortunately, financial institutions are geared up to kind of encourage consumers to make debt. And on the institutional side, they use debt to leverage and then use that to like get bigger returns. But financial institutions know what they're doing. They do this for a living. General consumers, you don't go to school and spend 6-7 years learning about how to manage money. Unfortunately, I think they probably should, but they don't. So a lot of people come out of it as adults inequipped to kind of manage their financial circumstances in the best possible way. And that's why it's great people like you, Brian, that are kind of helping people to try to build that knowledge base so that they can make better financial decisions.
Yeah, I mean, I think I probably say to everyone I ever speak to about money, it's just so sad that it's the norm is to get debt, and people don't even think of it like that now. They just think like when you get a car, it's obvious. Of course, you're getting on car finance. Why? Like, who has the money to save up and buy for a car? Like, it's not even for I don't know what the percentage is of people who car finance versus own their cars outright, but I'm pretty sure it's very high in the favor of car finance, because you just talk to anyone about it. You are strange if you think it makes logical sense for me to buy a good quality secondhand car for as cheap as possible and maintain it, rather than, well, I can afford £400 a month because I've got my recent salary increase, so I'm going to go out there and buy that BMW because I can afford it. We look at affording as what we can pay monthly, and I think that is just something that I don't know how. I mean, we can have as many content creators talking about money all we want, but I don't know how we change that, because the power lies within the big financial institutions who, like you said, leverage your money to make more money. So it's a never-ending cycle of, like, of course they're going to push debt and make it seem as attractive as possible to you, because they keep you shackled. Like, that's my story is I got into debt, credit card debts 5 years ago now, and that's what forced me into a corner. I mean, I was terrified. It wasn't even a lot of debt. It was only sort of £5,000-6,000, but I maxed out my credit card, had just changed my job to a low-paying job, and I was trapped. There was nothing I could do nothing. So, like, people underestimate debt when everything's fine and the economic climate is in your favor, and it's interest rates are low, it's absolutely fine. But as soon as a pandemic happens or a cost of living crisis happens, you're backed into a corner and you're terrified. And potentially, if you have a mortgage and you can't keep up with the repayments, your house is going to get repossessed, or the car finance company is going to take their car back, and you always have to prepare for the worst case scenario. And that's how I kind of approach talking to people about money now. Even if your situation is good now, just think for a second, like the situation that you're in, whereby you don't have a mortgage. and that's what I try and remind myself regularly, and that's why I try and increase how much I overpay on my mortgage as much as possible. I try and review it when possible and increase it, because I think, what's it actually going to be like to have that kind of emotional weight off your shoulders? It's almost primal. Like, this is mine. I own this. Nobody can take this away from me. And that's what I think I try and get across to as many people as possible. Because going back to what you said about affordability, 30 years ago, the ratio to salary and house price was 4. So 4 times your salary was your house price. And I know everybody always says it's harder now to get a house, and I'm sure they've been saying that since the dawn of mortgages and houses, but it really is. Now it's 12 times. So, like you're saying earlier, salaries aren't going up at the same rate as house prices, and then obviously interest rates on top of it. So, I do feel really sorry for people who are younger, don't have the privilege maybe of parents helping them out with a house deposit, or had the, started on a high paying job whereby they could put money away for it. What would you say for somebody who's in that space then? Like, what would you recommend, stepping aside from the overpayment, but just getting onto that ladder? Do you have any kind of insight, being in that sort of space, of seeing how people are getting into getting their first mortgage?
Yeah, I mean, it's tough. I think even when I was when I was working in the corporate world, I'd speak to grads, and even they were like struggling just with the rents being so expensive. And then obviously you're living your life. How do you find the money to save? I think it's ultimately kind of, one is looking at the kind of where you want to live. There's obviously some areas, if you're kind of really focused on like living in cities, obviously it's gonna be a lot more expensive if you go further out. And the good thing about the pandemic, I suppose, is that more and more jobs available in terms of remote working, etc. And so, the further you're out from kind of like the cities, and you've got good commuter links, maybe you can live in a property where the property prices aren't as high. And then obviously it's then kind of working out how much do you need for a deposit. And then going around trying to save. And it's so easy to spend money that you don't have. But if you can just be really like find just clever ways of just saving as much money each month, by doing that, you'll start to over time have enough pockets of the way to be able to kind of afford that first home. For me, getting married was helpful, because then you had 2 people, and 2 people's income, and then you can save more, and you've got more, you're doubling the savings, and obviously that helps. And I know a lot of people in the UK who have mortgages generally do it with them and another person. Obviously parents is a great thing to do. I mean, I know a lot of people don't like living with their parents because obviously they want to kind of live their life, but that I'm hearing a lot of people doing that as well, because then they're paying very little. They're not paying rent, hopefully, or they're paying very small amounts to their parents to kind of keep the upkeep, and etc., but a lot more money going towards kind of towards that deposit. And then just thinking about like, maybe if you can get comfortable with investing, that's also an option. But again, my number one thing, I get worried when sometimes young people who are not, who want to kind of build up that money, and then they take big risks and invest in things they don't understand, and getting themselves into even more hot water. My number one rule is things like investing and putting money into high savings accounts is obviously a no-brainer. But if you go into like investing, only invest in what you understand. So I know a lot of people who fortunately like look at YouTube videos and see like crypto and think of like these kind of get rich quick schemes. Generally, if it's too good to be true, then it probably is too good to be true. And if everyone's doing something, you're probably late to the party. So yeah, people just need to be really sensible. And diversifying is also a good way of kind of managing your personal finances. The other baseline is obviously to stay out of debt. Like there's no point. It's going to be very difficult to get into the property ladder if you're in debt. So that kind of financial discipline is just so important. And if you don't have the tools, then there's so many tools out there, especially with open banking now, to create the tools to be able to help you, put your money to work and save and show you transparency of where you're spending your money. I think that's kind of a step one. Like sometimes if you don't control, either via a spreadsheet or via like a savings app, seeing where your money's going, then it's very difficult for you to kind of tighten and control and create good habits. So that's always a good step in the right direction as well.
Yeah, there's a lot of good tips there. I think that is budgeting and the emotional, not comparing yourself to others, I think is because I mean, I remember what it was like being 16, 17, 18. It's about the age where you're getting your first car and maybe you've got your first job and you start getting money. Like it's hard, but I think it's the importance of why capitalism has given us so much good stuff, but equally, why are we not trying to balance it out a little bit at school? Like because this is what I do. I talk to people about this. I spend a lot of time researching it. I talk to my daughter about, we give her pocket money or she earns money by doing something. Right, save some of this money, put some of this money aside, and then enjoy that money. The things that like I was never taught when I was a kid, certainly wasn't taught it at school. We did we learn about limited companies and sole traders in business economics. I don't know, whatever year I was in at school, things that I was like, I'm never going to use this. Turns out actually I was going to use it, but it was so advanced. They didn't teach you the very, very basic, like spend less than you earn. This is how you do a budget. Like it might seem boring, but try and make it slightly more interesting, because that's the most important thing when you get into the workforce. You leave home, you get a job. If you're not prepared, if you haven't got financially savvy parents, or you surround yourself with friends who know about money, which at the time I didn't, so you just kind of do whatever people do around you. And if people are buying BMWs on finance, guess what you're going to want to do? Like as soon as it's, how much you're paying for that? £300. Okay, well, can I get £300? And then as soon as you get £300, boom, it goes straight on that. So it's that kind of like initial financial education that I really wish that there was a focus on it. Because even in the mainstream, like there's a few people on TV that do a good job of teaching people about savings accounts and switching your mortgage to this, and which is all great, but that's all that it's like a tiered system for me. That's level 2. Level 1 is just basics. Like this is what's coming in, this is what's going out. Make sure that you're not minus at the end of every month and putting stuff on a credit card, because it's too emotionally easy to just go, oh, I've been accepted for a credit card that's got a balance of £5,000. Oh, that means I can go and spend £5,000, which even though I feel like I'm smart enough to know that wasn't the case, I still did it.
Yeah, I think like I mentioned this quite early on. I think the education system needs to do more. I think there's ways of making it interesting for children as well. I mean, with technology available in games and things like that, I think you can create simulators and make it so that it's not just sitting in front of a classroom and looking at kind of debits and credits and it becoming so boring that you're just like, why am I listening to this? And having like speakers come in that are talking about like different situations. You're talking about maybe students and the challenges that they're facing, or people who have kind of maybe gone into debt like yourself, and going into schools and sharing their story and making it much more like realistic and tangible. I think stuff like that is more likely to be in fact impactful and kind of resonate to children. And so I think definitely schools need to do more, and hopefully over time that will change.
Yeah, I think online calculators are a great way of kind of tangibly showing somebody how it can affect them. I remember when I first kind of started learning this stuff, I spent a lot of time with the compound interest calculator, but then also a mortgage overpayment calculator, both really accessible. Just Google it if you've never used one. But to tangibly see, right, if I overpay my mortgage by X, or if I invested X amount at 5% return, or whatever it is you want to play around with, you can see actually this would be the effect over time, and you see the graph either go up if you're investing, hopefully, or down, with your how much you owe on your mortgage. And I think that inspired me certainly to be like, oh, actually, for the first few years, it doesn't seem like anything's happening. But if I chip away at my mortgage, or if I do invest in something, lowish risk, but for the long term, actually, I can really improve my situation, either have a fair bit of money sat in an ISA or be mortgage free.
Yeah, I mean, I think the visualization is really important. Like for us, if you download the app, the first thing we show is like the total cost of the mortgage. So it's just the slider that you can play around with. It doesn't need to be like exact numbers, but you say you've got like roughly a £300,000 mortgage and you've got 30 years left and you're paying, say, 5%. It then shows you the total cost of the mortgage over the lifetime, assuming you're paying that same rate for the remaining term. And people just are generally shocked by first of all the sheer number, and then the next page is like, can you afford £3 a day, or £5 a day, or £10 a day? And it shows you that if you could, and you made those payments towards your mortgage, then you could save an extra this much and pay off your mortgage this much, and it kind of gives you an idea of context. And then you then sign up to the app, and then you can set your limits, and then the app kind of gets you going. But throughout the app, we're continually trying to like show people that keep going. If you do what you're doing, then you will become mortgage free this much sooner, and you will save this much interest. And it becomes quite motivating for our customers, because you might start off and you might say you're chipping away, like the minimum that you can overpay I think is like £1 in the app. So like really I'm talking about low values, and even if you just want to do the shop with Sprive, you can do that and not put any extra money towards your mortgage. But you start seeing those numbers, and as you start the numbers increase because you're doing more and more, and suddenly go, actually, I can maybe do another few pounds a month or a few pounds a week, or I can do shop with Sprive and get there a bit quicker, etc. And you create that kind of small habits regularly. You see that the calculator, and you see the numbers inbuilt within the app, and you see the numbers increasing. Oh, now I'm on track to save 5,000, now 10,000. Oh, I was on track to pay off my mortgage a year earlier. Now it's 2 years earlier. Now it's 4 years earlier, and it becomes more and more like motivating, because you're seeing a real difference. I mean, for example, obviously I paid off my mortgage and saved £70,000 in interest. I mean, what can you do with £70,000? I mean, that's a lot of money. If someone said, just do these small habits regularly and you could save £12,000, like the average customer on Sprive, I mean, £12,000, you could buy a nice few holidays with £12,000, right? And you can invest that, and that could do you some good. So there's a lot to said about kind of that visualization for sure.
Yeah, it's almost gamified, isn't it? So I like, I mean, when I download your app, that was, like you said, it's the first thing that pops up, and it kind of engages you straight away, because it's very easy in the financial sector to be bogged down, like we're saying, at school when you learn about the stuff. It does seem just like numbers and graphs, and oh god, this is so black and white, boring. Oh, none of this applies to me. But as soon as you see, oh, actually, this is, I input my situation, and this is in real time, this is how it affects me, you're either going to be, very happy or very shocked and go, oh God, look how much money I'm actually wasting on whatever it is that I'm wasting my money on. You mentioned there about sort of investing. What are your thoughts on the kind of opposing view, which is probably the most popular one that I've ever got? Every video I've ever done about should you invest or should you overpay your mortgage, it's always about that risk versus mitigation of risk, guaranteed money by overpaying your mortgage versus the potential of higher earnings by investing. That by far is the biggest pushback I've ever got when I talk to people about overpaying your mortgage. What are your thoughts on that?
Yeah, sure. I mean, I obviously get that asked that quite a lot, and I mean, I'd say like if you can afford to, doing both is not a bad shout. I think the first thing with investing is, I said this earlier, is you need to understand investing. I think it's very easy if you don't understand investing and you put money towards things. It's almost, you could argue it's almost gambling, because you're just hoping that you're going to get a better return. And generally, I've seen a lot of people make investments, including myself. Some of them have done well, some of them have done not so well. And so with paying off your mortgage, it's guaranteed. And you're not paying tax on any returns. If you're investing and you make a return, you've got to pay tax on it. So with rates rising now, 4.25%, mortgage rates, close to 5%, for many people switching now, that's not a bad return that you're essentially getting without taking any risk. But there's the other benefit of it, which is that pressure of not be able to have enough money in the future or later in life to be able to essentially have that roof over your head. You never know what's going to happen. You might get into your 40s, your 50s and fall ill and not be able to earn as much. And do you really want to be late in life and still have that kind of mortgage to worry about? So there's definitely benefits of being able to like pay off your mortgage faster. And like my example, I paid off my mortgage relatively early in my life. It means I've got 20, 30 years to take risks, bigger risks, do what I want to do, live the life the way I want to live my life. And so with these things, is the more focused you are, the more likely you're able to achieve the things that you want to achieve. Yeah, if you can do both and you have the money to do both, then that's not a bad shout, because you're almost diversifying the risk. There's a bit of money towards investments, and there might be some upside there. But with the interest rates rising now, if you know 5% return, if you're starting to kind of move, start to kind of look to be paying that, which most people will be now with rates the way they are, once they switch over, it's not a bad return. So yeah, I think there's definitely emotional benefits with paying off your mortgage, but with the interest rates rising, there's benefits. There's benefits are like almost in the favor of overpaying, for sure. Because also when rates rise, the amount of interest you're paying becomes much more eye-watering. And do you really want to be paying that interest? Is the question you got to ask yourself.
Yeah, no, I have the very similar viewpoint. Have that sort of scattergun approach, diversify, don't put all your eggs into one basket. Crypto, a great example. People who knew nothing about investing put all their money into it, but if they just put 5% into it, and this is not financial advice, but if you put a little bit of money into that, and then a bit of money into that, and a bit of money into that, if that crypto coin, whatever you invested in, collapses, it's not destroyed your life. So by putting whatever X amount you have disposable at the end of the month to put towards investing, some of it can go towards, overpaying your mortgage, and some of it can go towards investing. Some of it can, if you want to go into crypto, fine, do it, but don't put it all into one thing. Like some people, if you're being really kind of laser focused on overpaying your mortgage, I wouldn't be opposed to putting it all in, because like you said, the risk, it is guaranteed money, and there is no capital gains down the road to pay. So it's the kind of that everyone's different. What's more important to you? Like my wife is very risk averse. She does invest, but she's very like, I don't want to put all my money into one thing. Tell me she doesn't spend a lot of time thinking about it, way less than I do for sure. But I'm happy to take that risk, like not because I understand what I'm investing in, certainly more than the average person does. But you can understand, you can think you understand it all you want, but there's always an element of risk that something might happen, stock market crashes, whatever. I just find that overpaying your mortgage is just that it's a separate bracket almost. It is that guaranteed money. One thing I want to ask you is with your app, what is your kind of like your main customer? Is it homeowners? Is it landlords? Is there a split of both?
No, it's homeowners with residential mortgages. So at the moment, we're not supporting buy-to-let mortgages. We will over time. So we support 12 of the largest lenders in the UK. So you have a mortgage like Barclays, Santander, NatWest, Nationwide. I mean, we cover 80% of the market from a residential standpoint. So yeah, ordinary homeowners who are living in their home, who essentially have aspirations to essentially one day be mortgage free and own their home. And one of the things I haven't talked about within the app is that it gives the user a lot of control, so they can kind of see it moves money automatically to their Sprive account. But if it's not a good week or month, they can always withdraw the money back. And there's things like early repayment charges. So some people are worried about, like, will I get penalized if I overpay too much? And so the app can show you that. It can show you things like, how much of my home do I own? Do I own 10% of my home, 15, 20, 30? So you get all those analytics. You can see things like your loan to value. I don't know if your customer's aware, but your loan to value depends, that kind of helps you decide what deals you can get when you refinance. So if you're looking to, like, say remortgage in 9 months and your loan to value, say 86%, you might, if you can afford to, overpay a little bit more, get to 85% loan to value, and then you get access to a much better set of deals than you would if you hadn't made those extra overpayments. And so the app gives you the analytics, etc. And so it's very much at the moment focused towards making it super easy for residential homeowners. And then to answer your question, over time, yeah, we'll expand to more lenders and also kind of residential interest-only mortgages, or commercial mortgages, etc., etc. I mean, to be honest, my aspirations are even to move into like the credit card space and student loan space as well. Ultimately, I want to make it a mission to help people in the UK be essentially debt-free, not just mortgage-free.
Okay, so you're obviously expanding the Sprive empire in the future into these other things. Have you had much pushback from people whose business solely relies on getting people into debt? You mentioned things like, sorry to interrupt, you mentioned things like early sort of repayment charges and that sort of stuff for mortgages. Obviously, different lenders have different amounts and some of them don't even have any. But obviously with your sole intention of the app is to help people overpay their mortgage, is there any reluctancy from certain people to be like, well, actually, it's not really, as much as they might not want to say it face to face, this isn't in our best interest because actually we make more money out of people having our products for longer?
Yeah, I mean, it's interesting. I mean, I do talk to lenders. I remember being in a room full of lenders talking about my proposition when we just first launched, and I could sense the room weren't keen that I was doing what I was doing,
I can imagine.
because ultimately, I mean, like you said, that they don't want necessarily people to overpay because they make less they make less money. But I don't think publicly they'd ever say that. I think
No,
they want to be seen as wanting to help homeowners, and last thing you're going to see is a lender going, actually, I want you to be in debt for the rest of your life and pay us
exactly.
a ton of interest. So lenders allow homeowners to make overpayments, and it's from a risk management perspective, it's very good, because if people are like overpaying, it means that ultimately less likely of defaulting, and creating good behaviors within the system means that less people are going to be late in life when potentially they might lose their job, or they fall ill and they're not in a position to be able to have the income to be able to pay off their mortgage. And so by doing what we're trying to do, you're trying to reduce the systemic risk that could build up within the financial markets. So I think my honest answer is behind closed doors, they might be like, I hope they don't get too big, because like if they're changing behavior in a massive scale, that will have an impact on their bottom line. But I also think, like, I'm trying to really be proactive in working with lenders to see how some of the forward-thinking lenders. There's always going to be ones out there who would be like, actually, I want to be seen as a lender that's on the side of the customer and make it easier, etc. And hopefully we can partner together and do some really interesting, great things for consumers, and that will help them build market share, increase customer loyalty, etc., etc. So I mean, there are some interesting conversations. I can't specifically name names, but there are lenders that are open to at least learning more. And hopefully we can come up with some amazing things that ultimately don't exist in the market today, that ultimately help homeowners.
Yeah, it's kind of, overpay, but don't overpay too much. So
Yeah.
we'll cap it at 10%. I mean, obviously it varies, but that's, from my experience, that kind of the most common one.
Well, my biggest frustration is if anyone's ever made an overpayment, most lenders make you pick up the phone and call your lender.
Yeah.
There's something called overpayment preferences. So if you if you Google to your lender's like overpayment calculator, generally you'll see, if you make overpayments, they'll say, oh yeah, look, make overpayments, you can save this much interest and you can pay off your mortgage x months or years earlier. But then when you make the overpayments, actually, if you didn't let your lender know, you don't actually become mortgage free any quicker, and you save a lot less interest. A lot of lenders put this step in that you need to call them on a one-time basis and say, look, I'm going to be making overpayments. I need you to update my overpayment preferences so that my monthly payments stay the same. And so that, and ultimately I want the money to go towards the kind of paying off the balance, the capital, so that I have the benefits of being able to become mortgage free faster. And a lot of people are confused by the process. They don't make that call. They don't have time to make that call. And lenders love that. That one call probably results in them making so much more P&L, because they just made that slightly awkward for people, and they made it slightly ambiguous, and people don't get it. I know a lot of people are making overpayments or think they're saving interest outside Sprive, and then actually not saving anywhere near as much interest or being mortgage free any sooner. And sadly, they'll only find out like maybe 2-3 years down the line, if ever, or a lot later in life. And the lenders will be like, well, you should have read the terms of your mortgage offer document, etc., etc. You should have read the website, and there's nothing a homeowner can do about it. And that's where Sprive steps in. We're trying to really help people. We explain what you need to do, what number you need to call. We've got a customer support team that can help if you get stuck. We literally have over 20,000 customers now using Sprive, and everyone, touch wood, no one's had a single issue. So it's we're good at this, and we're helping people and guide people in ways that maybe your lender is not making it as easy for you as you'd maybe hope.
Yeah, it's I've said this a few times on the podcast, but I'm not a conspiracy theorist. But if I was, the financial institutions, mainly lenders, it seems like they're in cahoots to prevent you from knowing these things. Because, like you just said, then it's a great example of making it appear as if they're doing a good thing, but behind closed doors, they've got all these loopholes in the contract whereby if you have to do this, you have to do that. And even people trying to do the right thing, or what they think is the right thing by overpaying their mortgage, get bitten by it. It should be as simple as the Sprive app. It should be, I want to overpay my mortgage. I just overpay my amount and it goes straight towards the capital. But why? It really frustrates me because I don't think there's anything we can do to change it. It's so systemic in how the system works, and it works quite well as a system across the country. So why change it? But it's so complex, and having apps like yours that really simplify something that is quite confusing and complicated, we need more of that.
Yeah, and I think in terms of changing it, I think there needs to be a voice. There isn't a voice at the moment that's on the side of the consumer. So, like, my view is that look, we need to get bigger. We're only like around 20,000 customers, and we've not been in the market for very long, but that will increase. And if we've got hundreds of thousands and millions of customers in the UK, we'll be able to do more lobbying. With the regulator, with the lenders, if we've got more social media, we can get our customers to be that voice for us and encourage them to create that noise, which encourages lenders to then change their behavior. We can start looking at lenders who suddenly become much more customer and user friendly and homeowner friendly, and then kind of put them on a pedestal. So then the other lenders will go, oh, our competitors are doing, they've changed tact, we need to change tact. But you need someone to have a voice, and at the moment there isn't a voice. I hope that we can be that voice, but we need to get bigger for sure.
Well, I think with rates rising, mortgage payments are at the forefront of a lot of people's minds now, aren't they? So I think although it's a bad situation economically, I think it's a good time for your app to be, not starting, but in a growth stage. From your perspective, then, it's the next sort of 3 to 5 years? Obviously, the idea is growth. What sort of, you've already mentioned a few sort of credit card space and different areas to try and help people out with in a situation of debt and reversing it. But what do you see happening with Sprive? What's the vision?
Yeah, and ultimately, like I mentioned, like mortgage debt is the primary focus, and so like at the moment we've got like a few different features. So to kind of summarize, we've got the auto save, which with one tap you can make overpayments to your lender, but if you need the money back, one tap withdrawal, and it gives people a lot of control. You can pause, you can adjust the amounts, you can top up. So that's kind of our core functionality. And then we've got Shop with Sprive, which is do everyday shopping with amazing brands and get extra money towards your mortgage. Which is like cashback, but cashback invested into your mortgage. And if you're paying 5% of your mortgage, you'll be amazed in terms of the impact that can have. Then we've got this whole concept of scanning the market every day for better mortgage deals. With the information we have, we know pretty much when you sign up. One of the cool things, if anyone listening decides to download the app and give it a go, is once you link your bank account and you provide your name, address, and date of birth, we automatically source your mortgage information. So there's no typing in what's my mortgage balance, what's my monthly payments, what's my interest that I pay. We know it all, and we know it automatically, and that puts us in a unique position where we can compare. On a given day, there's like 20,000 mortgage deals across 90 lenders, and we'll compare your deal versus the deals in the market, and if we can find you a better deal at the right time, we'll help you get that deal. And so that's kind of the core of the offering right now. But one of the things we're working on this year is how can we help our customers save more money and earn more money that they can put towards their mortgage. So say, for example, as your homeowner, there's lots of things that you'll spend your money on. Like obviously you do your weekly shop and that exists, but even things like maybe you want to make your home more energy efficient and reduce your energy bills, and so you might decide I want to install like solar panels. Well, we will partner with a solar panel company, which ultimately if you go through the app, you might get an extra X amount of pounds that you can pay towards your mortgage, or we'll find you innovative ways of be able to earn more. So we're doing a partnership with Just Park where I didn't know this before we started talking to them. them, but for some postcodes you can earn up to £4,000 just by renting out your driveway if you have one. And £4,000 is a lot of money, and you put it towards your mortgage, and it's even more money in terms of the amount of interest that you save. And so, can we find ways of helping people earn more money? We're contemplating this idea where you can opt in by hitting a button. Every time you hit a button, you get displayed an ad within the app. But every time you watch the ad, you might get paid, 50p or £1 or whatever it might be, whatever we can agree with the brand. And again, maybe you watch 30 ads or 60 ads a month, and that's 15, 20, 30 pounds extra towards your mortgage, and that makes a huge difference. So even like we're talking about, can you sell things within your house? Like if you look at my house, I've got 2 young kids. The amount of toys that I've got that they don't play with anymore, and old clothes, and is there a way you can sell that for a bit of money? And can we help that through the app? Again, that extra money then can go towards their mortgage. And so we want to create very much an ecosystem around that. And then we're helping people with like the mortgage switching, but can we help them get home insurance? Can we help them get life insurance, health insurance? Home insurance, obviously, if you're a homeowner, then you need that to be able to have a home with a mortgage. Life is important in that hopefully this never happens, but sometimes you do fall ill, and if you fall ill and you're not able to work, then again your home is at risk. So having that insurance policy in play can give you that kind of comfort, especially if you have a family. Likewise, there's health insurance policies, etc., with NHS and some of the struggles that they have. People might be like, actually, I want to get my own kind of private medical insurance, so that I'm kind of in a good position in that space. So we'll be looking at things like that, and then we'll be kind of going beyond that. But then kind of like I mentioned, like I'd love to kind of focus on like the whole like asset allocation piece. So a lot of people have this question: should I pay off my mortgage? Should I invest? Should I put money towards my pension? What should I do with my cash? And I think there's a space where if you help people with their largest household commitment, which is their mortgage, where people are borrowing, unfortunately, typically hundreds of thousands of pounds over the lifetime, you start helping them get on top of that. Then you can start maybe going, okay, you're getting on top of that. Do you want to put a little bit towards investments, a little bit towards your pensions? And I love to be able to build an app where you can do that all in one place. And you've already finding ways of them helping them save more money, earn more money, and you're doing that really well because you've done that for mortgages. And then maybe they want to put a little bit of a snippet into investments, or a little bit of snippet into their pension, and doing that would be absolutely amazing. And then helping more users. And so we're focusing on people with mortgage debt, but there's a lot of people out there with credit card debt, student loan debt, car finance debt. Debt is debt at the end of the day. If we become very good at helping people pay off mortgage debt, why can't we help people be very good at paying off credit card debt or car finance debt or student loan debt? And then obviously UK is where we're focused, and that's where we want to really put our energy in. But I do have investors, including like the founder of 118. I don't know if you remember that brand. The two marathon runners, iconic back in the day when I was younger, watching television and then sponsoring the movie ads and stuff like that. But yeah, he's always like, this would be amazing in this country and that country, and debt is obviously really, really prevalent, not just in the UK, but in other countries around the world. So who knows? Maybe we can then expand to other countries too.
Yeah, that's exciting. It's exciting times ahead, and like my whole ethos, the reason why I got into doing this was to help people get out of debt. So I'm really appreciative of everything that you're doing. I think it's going to help a lot of people. Hopefully that number multiplies rapidly, that 20,000 number. And I think, what you guys are doing are brilliant. I've used the app. I genuinely think people listening should go and give it a go if you're interested in it. One thing I like about it is that if 1 month you kind of, it tells you what the AI is generated you can pay off. You don't have to pay that amount. Like if something springs up, you can prevent it from happening. And I think you have, even though it is automated, you still have that control. So I think if anyone thinks like, oh, what happens if it chooses an amount, which I think would be the only pushback that I could think of from the app, you can stop that from happening. So just go and play with it, have a look. And the cashback sort of side of things, I think is brilliant. Like if you're shopping at the places that you can get that cash back from anyway. Why not put it towards your mortgage? And I think that's great. So yeah, no, I really appreciate everything you're doing with the app, Jinesh. And I hope you guys explode and take down these big lenders as much as I think they do good for the economy. I think it'd be great for people to be debt free. And I think that's what I put a lot of my time and effort into. So I appreciate you doing the same thing.
I think it's look, we're just getting started. I think, like you said, we're kind of providing automation, but with a lot of user control. So they can cancel any of our auto saves. They can pause them for a week or month or three months, or even indefinitely. They can top up. They can withdraw the money back if they want to pay to the lender. They just need to hit one button once the money's in their Sprive account. So there's a lot of like control. It's protect their money. Their auto saves are protected by the direct debit guarantee. So we've put a lot of like safety and controls so that it's making things convenient, but the user doesn't feel like someone's taking their money and there's nothing they can do about it. I think that's kind of the super important thing that I think people listening should kind of get out of this. And the other good thing is you can set limits. So you can say the minimum I can afford is £1 towards my mortgage, and the maximum might be £25. Then we'll just work within that range. We've got people who've got a lot more money and be like, the minimum I can afford is £500 and the maximum might be £750. Then we'll work within that range. So not everyone is equal, but you can set limits. But then the beauty of it is that your spending changes every week, right? Every month. So your overpayments, it should adjust to your lifestyle. Like there's some crude ways where you can just maybe make an overpayment once a year, or make a payment that's regular, but it's the same amount. But your life doesn't work like that. And lenders are ruthless. We talked about amortization, where they front load interest payments, but they also calculate interest daily. So every day the interest is being calculated. So the more regularly you make overpayments, the more interest you're gonna save. And so if you've had a good month and you're spending less, why not put a bit of extra towards the mortgage? When you've had a month where you've had to spend, you've gone on holiday, or you've bought lots of presents or whatever, you've paid for a party or whatever, you've got less money, then put less money towards your mortgage. But it should adjust to your lifestyle, and that's what AI and technology is all about. It's about being smart and not just doing things in a very mundane way. And the last thing I'd say is obviously we want to grow, and we are growing really, really well. Like a big chunk of our growth is just referrals. So friends and family basically saying, I'm using this app, it's great, you should go check it out, and it's really good to good to see. And at the moment we've got a lot of customers coming into studios and talking about their own personal experiences and providing customer testimonials. We've had a lot of customers also go and say, can we talk to the national press about our experience? Recently we had a customer on ITV News. We've had them on all over the national press, and that's really great for me to see as well, where it's customers just coming back and saying, you're doing great things. We love the direction you're heading in, and we want to help you grow, which is really, really endearing and really motivating for someone who had this idea, and it was just an idea at one point in a PowerPoint, and then it's now become something that we're processing millions of pounds of payments. It's really great to see, but yeah, still a long way to go.
Yeah. Amazing. Yeah, just seeing it tangibly actually is affecting people's life in a positive way enough to go on the news and talk about it must be a great feeling.
Yeah, sorry, that's the last thing I was going to say. I mean, if you take a step back, how many apps can you have on your phone that help you, save that much money? Where average customers saving £12,000 in interest. I have so many apps on my phone, but I don't think there's any apps that are as impactful. And I think that's the difference, and hopefully that will kind of help us be very, very successful in the short, medium, and long run.
I have no doubt that you will be. Jinesh, thank you so much for your time today. Could you just tell everybody where they can find Sprive?
Sure. So head to the App Store, whether you're Android or iOS, type in Sprive, SPRIVE, and you'll find us there. And you can download the app. It literally takes a couple of minutes to sign up. You just need to link your bank account, name, address, date of birth, set your limits, and then you're pretty much onboarded. And then we can get you going and help you, pay off your mortgage faster. And if you still want to find out more information, sprive.com is our website, where you can kind of see just a little bit more information. And then for anyone else listening that's interested in following my own personal journey as an entrepreneur, trying to take on the mortgage market, you can connect with me on LinkedIn, Jinesh Vohra. I'm happy to accept your connection. I post on a daily basis, so you'll see exactly what's happening, and you can follow the story there.
Amazing. I'll put everything you just said in the description of whether it's video or audio down below. So go and check them out there. Jinesh, thank you very much. I'm sure we will speak soon.
Brilliant. No, thanks for having me, Brian.
Take care.